Hello, students, and welcome to the next lesson of business studies. In today's topic, we are going to learn the types of capital market, the difference between primary market and the secondary market, and the methods of issuing securities in primary market. In my previous video, I have explained to you the meaning of capital market. Now, today we will learn the types of capital market. So, there are two types of capital market: primary market and secondary market. Primary market is also known as new issue market. In this market, securities are sold for the first time. It is freshly issued to the investors. In this given diagram, you can see that the company is selling its stock or securities to the investors. The secondary market is the market for sales and purchase of previously issued or second-hand securities. In secondary market, securities are not directly issued by the company to the investors. The securities are sold by the existing investors to the other investors. So, the gain or loss belongs to the investors and not to the company. It is also known as stock market. In this diagram, you can see that in secondary market, companies are not included. The transactions take place between the investors only. Now let us check some differences between the primary market and secondary market. Point number one is on the basis of types of securities. In primary market, there is a sale of new securities, whereas the secondary market is the market for existing or second-hand securities. Next is on the basis of issue. In primary market, securities are directly issued by the companies, but in secondary market, securities are transferred between investors only. On the basis of capital formation, primary market contributes directly for capital formation, but secondary market contributes indirectly for the capital formation. Next is entry. All companies enter the primary market to raise capital for their operations. But in secondary market, only listed companies' securities are bought and sold. And the last one is on the basis of price. Prices of securities in the primary markets are fixed by the management of the company. But prices of securities in the secondary markets are fixed by the demand and supply factors of stock exchange market. Now we will learn some methods or ways of issuing securities in primary markets. The first method is public issue through prospectus. Prospectus is nothing but a printed booklet that describes an enterprise such as a business or publication, and that is distributed to prospective buyers or investors or participants. So, under this method, the company issues a prospectus to inform and attract the general public. In the prospectus, the company provides all the details about the purpose for which funds are being raised, past performance of the company, etc. Second method is offer for sale. Under this method, new securities are offered to the general public, but not directly by the company, but by an intermediary who buys the whole lot of securities from the company. The third method is private placement. Under this method, the securities are sold by the company to an intermediary at a fixed price, and in the second step, the intermediaries sell those securities not to the general public but to some selected clients at a higher price. The fourth one is right issue. This is the issue of new shares to the existing shareholders. It is called right issue because it is preemptive right of shareholders that the company must offer them the new issue before subscribing to the outsiders. Now, preemptive rights are the rights of the existing shareholders in a company to purchase newly issued securities before it is offered to others. And the last method is EIPO. The full form is Electronic Initial Public Offer. It is the new method of issuing securities through online system of stock exchange.